Hey there, welcome to Nebi Invest. So February is finally here, which means Appendix 4 season is now over for another month, or another quarter, I should say. But we've transitioned from one of my favorite months to another favorite month, which is February. So you probably could have an educated guess why this month is among my favorite months, particularly if you know anything about the ASX reporting calendar. And I'll talk about that in another video. In this video, we're going to concentrate, or I'm going to concentrate, on 6 more small cap companies on the ASX that have been running hot. Now, these companies range from one company that's been running hot for one day to another company that's been running hot since March 2020. Now, before I get there, I just want to talk about what happened last Friday. So this is a watch list I created in ComSec, which features most of the companies that are running hot. Doesn't feature all of them, but most of them. You can see what happened on Friday. There was a lot of red here. Not only a lot of red, but very large red numbers. So for instance, BPH Energy was down 29%, LIT was down 21%, and ATC was down 17%. In fact, only 3 companies on this watch list were break even, so there was no green or anything. So what I think was happening last Friday, there was a lot of risk being taken off the table. A lot of investors were taking profits, and they were a bit concerned, a bit wary about what was going to happen in the next few weeks. So I thought that's what happened. It was widespread, this profit taking. All companies were affected. But the thing is, a lot of these companies are in the same sort of space. And I think that space, that lithium EV space, there was a lot of, because they've been running hard for a few weeks, I think a lot of people were taking profits on Friday. So the first company I want to talk about is BPH Energy. So I've already mentioned them in the previous slide, that they had the biggest down day on the Friday. But still, they're up 583% from, well, that's actually up to the high point. And the high point was on Thursday, where the share price got to 33.5 cents. They actually finished on Friday at 17 cents. So from the peak to the end of closing on Friday, they actually did drop 50%. But they have a market cap of 99 million. So what does BPH Energy do? Now, they hold an assortment of investments, say biomedical and that sort of thing. But I think one of the reasons, or the main reason they ran or have been running hot, was their investment in Advent Energy, which holds 85% of the PEP11, which is the Petroleum Exploration Permit 11, which is offshore of the Sydney Basin. And I think there's been a lot of news about carbon capturing in the past week or so, and so a few companies that do have investments in carbon capturing have been running hot. So that's the main reason BPH Energy. I've got to remember not to say BHP Energy, which would be completely different. BPH Energy has been running hot. So you can see all they've done, or the only announcements in the past week or so have been a response to ASX price and volume increase. So that was ASX wanted to get an explanation from the company why the share price was running really hard on really high volume. So there's no other price sensitive announcements being released to the market over the past 5 or 6 days that could explain why the company's been running hot. Now, what happened today on the 1st of February? They went into a trading halt. Now, this is for capital raising, and this is what management teams should do. When the share price runs hot, you should always raise capital, especially if you're not bringing in any money. There's no cash flow. Raise capital when the price has been running hot to lock in that price. So good job, I think, by management. Some people out there might not believe this is a good job, but in my opinion, when you raise capital, when the price is very hot, that's a sign of good management team. The next company I'll be talking about is Calix. So Calix has been up 52% in 7 days. Ticker code is CXL, market cap of 233 million. Actually, this is a really nice looking chart, exactly what the sort of chart I like to see. You can see it's been running good, nice, good uptrend, and the last about 7 or 8 trading days we've seen really good volume increases. So this is a company that has projects in advanced batteries, crop protection, wastewater, carbon reduction. So they call themselves a global sustainability technology company. So they're trying to do good things for humanity, for society. So you have to say that's something that's going to be running hot over the next few decades or so. And I think the main reason they've been running hot is that last one, the carbon reduction or carbon capturing. So this is definitely a company, I think, if you're really interested in this sort of space, in the sort of sustainability technology space, this is definitely a company I would recommend you do some further research on. Next company is Magnis Energy Technologies. This is a company my nephew bought at 9 cents. Now, my nephew is something like 12 years old, so this was the first company he's ever bought in. When he wanted to get my advice, I said, maybe buy some ETFs. And he said, no, I found this company called Magnis I want to buy. He bought it at 9 cents and it went to 20 cents in about 3 or 4 days. But ever since then, it's been going sideways. It's been consolidating. And what I found in the future, when a share price consolidates in this over a long period of time, it can explode on the upside quite quickly. And that's exactly what Magnis has done over the last 7 days. So it's gone up 94%, and it's reached a peak of 40 cents or so from 15 cents in that time period. Now, this company wants to become the world's largest producer of lithium-ion batteries in the world. So, well, of course, that means world's largest. But anyway, so they have 3 main core areas: battery technology, the gigafactories in New York and Australia, and the graphite deposit. So they are diversified, which is good. And they have a market cap of 226 million. So if you do like the space they're in, if you like the batteries, you think that has lots of potential, and you might want to research this company a little bit more. But it looks like the market is fairly excited about what they're doing and where they're headed. The next company I want to look at is Cryosite. Now, this company is up 501% since April or even May 2020. Now, that means you probably think the market cap might be quite high. No, the market cap is only 21 million at the current time. So that means if you go back to April, May, the market cap was 4 million. Now, if you go back to that period, this would have been not the best investment to have, simply because it was extremely illiquid. And what I mean by illiquid, you can see in April, I've included on the top right there, I've just got the trading history going back to April, May. You can see in April, it was only traded on 2 days in that month, on the 6th of April and the 17th of April. And then in May, it was traded once on the 18th of May before something happened on the 27th of May that got the market really excited about this company. In fact, the share price went up 53% on the 27th and then 88% on the 28th. But there was no announcement. So I went back through the announcement history, and there was nothing to explain what happened. In fact, the ASX gave Cryosite a price query to try to understand why the share price was increasing by that amount. There was no explanation, no reason, but it gave a bit of a kick up to the liquidity. So the liquidity started to increase, and we've seen that liquidity increase even more over the past few months. The share price has increased along with it. So it's been trading almost every single day since then. Well, every single day over the past, say, 2 or 3 months, and the share price has risen to 45 cents now. So that was a sort of a sign that massive volume increase on the 27th and 28th. So someone was getting excited for some reason. Now, this company is profitable. So that's the one thing going for it. It is a profitable company. It does make money. In fact, I'm going to do a video on this company and a few other small cap profitable companies in the future. So look out for that. I'm not sure then when that will be released, probably the next, say, month or so, because I just want to wait for some of the half-yearly reports or yearly reports, and Cryosite will be one of those companies that I'll be doing in that video. Now, the 5th company I'll be looking at is Chalice Mining. So this has been a phenomenal value creator for its shareholders, especially those who have not sold in the past year. So the share price has risen by 1,356% in 1 year. Most of that has been since the 23rd of March, which, if you remember, the 23rd of March was the low point in the overall stock market. So this was also almost the perfect time to be releasing a price-sensitive announcement to the market that was highly positive. And that's what Chalice did on the 23rd of March. So they released some drilling results in regards to their project in WA, and the share price rose 145% in the one day and closed on that day at 38 cents. Now, there's a lot of people, and I've heard this from some investors, that they'll never buy when they see the share price rise by like that amount in one day, or they'll never buy when the share price is at an all-time high. And this is a perfect example why that sort of mindset can harm your overall returns, because whenever I've seen a very positive announcement where the share price has risen by this amount, that's sort of 145% or so, you can always see the share price run even further for a longer period of time because there's really a lot of positive momentum behind it. And that's what's happened with Chalice Mining. A lot of positive momentum. The share price has risen really hard. In fact, it's gone from 38 cents to $3.93. So you would have made 10 times of money if you weren't hesitant in buying on that day where they released this announcement. So that's the main thing I learned from this announcement, was that to be mindful that you should not be wary about such significant price rises in one day. The last company I'll be looking at today is Oneview. Now, they released an announcement today before trading begun in regards to a distribution agreement with Samsung SDS America in regards to a SaaS digital care solution in North America. Now, initially, the market didn't know how to digest this information, and the share price opened at 5 cents. So I think it closed the previous day at 4.3. So I was still up 10% at open, but then the share price just kept on rising for the next 2 hours. So it went from 5 cents all the way up to 13 cents at midday. Then as soon as it hit 13 cents at midday, it seems like traders went to lunch, and those who didn't go to lunch started to sell. So I think we saw a bit of profit taking during the rest of the day, and the share price closed at 9.3 cents. Still a 121% rise in one day, which is not bad if you're a shareholder at the start of trading. Now, this is not the sort of announcement I get overly excited about, simply because we don't know the financial particulars in regards to this agreement. I've seen agreements between small cap Australian companies and large international companies in the past, which has been overwhelmingly in favour of the large international company over the small cap Australian company. Doesn't mean that's like it in this case, but I have seen it in the past, so you have to be mindful of that. Now, also, I've included the 5-year weekly chart here, and if you go back to the beginning of 2017, the share price of Oneview was $6. So from 2017, from $6, the share price has dropped all the way to 10 cents. So this company has been traditionally a value destroyer for shareholders. But this could be their inflection point, the turning point for the company, and I'll be interested to see how they go over the next few months. So last Friday, we had a significant down day for most of the running hot stocks on the ASX, or what I was following anyway. Every single company was down except 3, which were flat. Today, very topsy-turvy sort of day. Initially, the overall market was down something like 1.2 to 1.3%. But then the American futures turned green. It started going up, and we follow the American futures during the day, and we definitely follow them today. So overall, the market finished up about 0.8%, so there was a 2% swing overall. And we see a wide range of outcomes for these running hot stocks. Some companies were up significantly, some companies were down significantly. And I sort of see that a lot, where if some companies are down pretty strongly at the beginning of the day, they don't recover, while some other companies do recover. So that's what we've seen here. Some companies recovered, some didn't. So hopefully the companies you hold in your portfolio did recover today when the overall market swung in the green. So that's all I've got today for the 6 Hot Small Caps Part 3. Hope you've enjoyed this video. And again, I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified. This is the portion of the video that is least viewed, so if you are viewing this right now, well done. You've lasted longer than most of the other viewers of this video. Congrats!